Hello, this is the Hartnett Flow Show walkthrough. We present Hartnett's Flow Show, macroeconomic analyst, two ways. One, in a walkthrough where we walk through his particular lingo and break down his prognosis for the markets. And then second, we have that same report broken down in written form underneath. First, some housekeeping. We have a lot of new subscribers these past couple of weeks with all the activity in precious metals. So we want to give a very brief overview of what this is. This is not necessarily about precious metals, this report. This report is about macroeconomics, and we look at precious metals through this lens in the markets surrounding gold and other monetary assets. However, Michael Hartnett has been speaking about gold frequently over the last year. And after a brief break about 2 months ago, he's back on the gold wagon. And this one isn't directly about gold, but there's a lot of gold content in here making his case. So while he talks about the dollar, hence the title, Debasement is the Base Case, he's implicitly talking about gold, and he's explicitly saying what ends a gold bull, and we're not close to an end of a gold bull, according to his analysis. And this is continuous from his 2025 analysis, and it shifts gears, we think, rather adeptly from BBB to big and mid. That's the name he gives his analysis. A couple other things we want to share with you first. Over the last month or two, we've made the case saying things like conflict, paraphrasing Josh Fair, who said it first, metal wars, and other things like the Venezuela deposing of Maduro was really part of excommunicating China's influence from Latin America and how China pushed back with their assertions about Taiwan. Well, we've noticed a couple things at the trading and flow level, and those flow things were as follows. China was getting squeezed on silver, whether intentionally or not. There was evidence to that effect as they were trying to secure supply chains that they were losing in Latin America. The U.S. bullion banks had flipped long. J.P. Morgan had made metal unavailable for China to buy in the U.S., and the U.S. started repatriating more silver. Repatriating is probably not the right word, but bringing in concentrate. Reports of that were verified by multiple refineries and bank contacts. Now, what we noticed over the last 2 weeks, positively, but always a little bit skewed, is that every major American bank and some European banks began to get very bullish on gold even after the rally. J.P. Morgan Chase calling for $8,000, Bank of America raising their target, Goldman Sachs going from 4,900 to 5,400, and there were many more, but we've only put those three there for your instance. We woke up this morning and we wanted to see what Chinese banks were saying about gold, considering that China is the gold market. That's where the demand is. Well, in the last 48 hours, even though that says last 2 weeks, in the last 48 hours, the top three banks in China have put out warnings to not buy gold. Industrial and Commercial Bank of China, Bank of China, and China Construction Bank. Those are the three, I believe, the biggest banks in China. And they're saying the exact opposite of what the American banks are saying. Now, there are more. I'm just giving you three classic examples. Keep in mind that we believe there is a war going on between the U.S. and China over currencies, and gold is one of the battlefields, and silver is one of the other battlefields. And that is a lens that we are looking at things through now. So, for example, we believe Bank of America will err on the side of bullishness for gold because we want gold to go up now. The U.S. wants gold to go up now. I truly believe that. Now, that's an opinion. It needs to be more developed. We're going to look into this a little bit more, but we wanted to show that to you to let you know that that's our own bias. Here's a silver chart to that effect.